Welcome back to Quant Finance. Let us jump right into Nikkei 225 as we know that the Nikkei 225 as Japan's premier stock index holds a significant weight not only in Asia but globally, and its volatility could indeed trigger a market avalanche. Japan remains the world's third largest economy, and its deep integration into global supply chains means that fluctuations in the Nikkei 225 ripple far beyond its borders. If we look closely, the factors are already in place: persistent deflationary pressures, an aging population reducing domestic consumption, and the Bank of Japan's unconventional monetary policy, including negative interest rates, have created an unstable financial environment. Should any external shock, like a global recession or geopolitical tensions, destabilize the Nikkei, it could result in massive sell offs across interconnected markets. With many global funds and institutional investors having exposure to Japanese equities, a sharp decline in the Nikkei 225 could force these investors to liquidate assets worldwide, creating a domino effect. It is not just about Japan, it is about how deeply the world's markets are interwoven. In a financial landscape this fragile, the Nikkei 225 has the potential to be the trigger for a larger global financial shakeup. Now we are diving into a topic that should be on everyone's radar: Japan, the epicenter of recession shockwaves. Japan has long been a major player in the global economy, but recent developments have raised serious concerns about its future. Let's break this down into four key points: the weakening of the yen, the risk associated with carry trade, the threat of stagflation, and Japan's aging population demographics. I will show you how these factors could potentially trigger a global economic downturn and why we need to pay close attention to what is happening in Japan right now. Today, we are connecting these dots to dive deeper into the forces at play in Japan's economy and why it could be the epicenter of global recession shockwaves. So, let's break this down into four key points: the weakening of the yen, the risk associated with carry trade, the threat of stagflation, and Japan's aging population demographics. I will show you how these factors could potentially trigger a global economic downturn and why we need to pay close attention to what is happening in Japan right now. First, let's talk about the yen's weakening. The Japanese yen has been under significant pressure lately, and it has been losing value against major currencies like the US dollar. This devaluation is not just a small blip on the radar, it is a clear signal that Japan's economic foundations are weakening. When a country's currency loses value, it can lead to higher import costs, which in turn can drive up inflation. Japan, which is heavily reliant on imports for its energy and raw materials, is particularly vulnerable to this. The weakening yen is already making life more expensive for the average Japanese consumer, and if this trend continues, it could lead to a deeper economic crisis within Japan. And of course, when one of the world's largest economies falters, the ripple effects are felt globally. Next, let's address the risks of carry trade. For years, investors have been using the Japanese yen as a funding currency for what is known as the carry trade. Essentially, because Japan's interest rates have been so low, investors borrow in yen and invest in higher yielding assets elsewhere. This strategy has been extremely profitable, but it is also incredibly risky. As the yen weakens and the Bank of Japan hints at possible interest rate hikes, we could see a massive unwinding of these carry trades. When that happens, it is not just the yen that will be affected. global markets could see a sudden influx of capital being pulled out, leading to sharp declines in asset prices across the board. The carry trade is like a house of cards. Once one card falls, the whole structure could come crashing down. Now let's discuss stagflation. Stagflation is the worst of both worlds, stagnant economic growth combined with high inflation. Japan has been teetering on the edge of stagflation for some time now. The country has been struggling with slow economic growth for decades, and now, with inflation starting to rise due to the weakening yen, the risk of stagflation is becoming more real. If Japan falls into a full blown stagflationary environment, it will not just be a domestic issue. Japan is deeply integrated into the global supply chain, and economic stagnation in Japan could lead to disruptions that are felt around the world. Moreover, as Japan's economy slows down, it could lead to reduced demand for goods and services globally, which could further exacerbate economic slowdowns in other regions. Finally, let's talk about Japan's aging population. Japan's demographics are another critical factor that cannot be ignored. Japan has one of the oldest populations in the world, with a significant portion of its population over the age of 65. This aging population presents several challenges: reduced workforce participation, increased healthcare costs, and a shrinking consumer base. As the population ages, the economic burden on the working age population grows, leading to slower economic growth. Additionally, an aging population means that Japan's domestic consumption is likely to decline, further exacerbating the country's economic woes. This demographic trend could also have a global impact as Japan's demand for goods and services diminishes, potentially leading to reduced economic activity worldwide. So, what does this all mean for the global economy? The weakening of the yen, the risk associated with carry trade, the threat of stagflation, and the challenges posed by an aging population are all interconnected. Japan's economic challenges are not isolated. They have the potential to send shockwaves through global markets, leading to a chain reaction that could result in a global economic downturn. It is critical to understand that Japan's steep downfall is not just about a single country, it is about the global implications of a major economy faltering under the weight of these issues. This is not a scenario we can afford to ignore. As we watch these developments unfold, it is important to stay informed and be prepared for the potential impact on global markets. Thanks for joining, and I will see you next time.